Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket. But if you can make your client's money at the same time, it's advantageous to everyone, correct? No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Hi guys, welcome to the Greedy Trader channel. Well, I'm not exactly greedy, as most of you old watchers of the channel will testify. I have the most conservative approach to trading. It's just a nice parody idea from the Gordon Gekko mantra. There are only two kinds of traders, the greedy ones and the fearful ones.
Greed, for lack of a better word, is good. Greed is right. Greed works.
Those of you who are new to the channel, this is where you can learn how to really trade like a professional. Every video I make is packed with real examples with before and after scenarios, so you can see that it is simply a question of sticking with the plan and not changing it because you're having an emotional meltdown.
No!
Hi guys, it can't be this easy. That's what we're talking about today. It can't be this easy. Right. I'm going to tell you exactly why it is I'm saying that. A lot of people approach trading like it's easy. It's easy and it's not easy. And I'll tell you why it's not easy. That's a good place to start. It's not easy because you've got to deal with your emotions. You've got to deal with other things. You've got to deal with your own discipline. So it's not easy. Because somewhere in our childhood, we got broken by our parents or someone who told us at that point when you went down the road and you dropped, I don't know, a £20 note. And everyone's like, oh my God, you lost money. How could you drop that £20 note? That was careless. Or it was that moment where everyone's like, you got to do the best thing for your own life. So you need like a lot of money to do that. And you've got to be responsible and you get a job. And you've got to make sure that you do everything right so you don't end up broke. So there's a lot of negative emotion associated with money. And that's just what the issue is for a lot of us anyway, a lot of people. I'm just a humble trader, so I have the same experiences and, you know, I'm just a human being. Some people think, I don't know, traders are some kind of, you know, Greek gods or something where, you know, oh God, I'm a trader, I'm freaking Jesus. The truth of the matter is that we're just normal human beings who maybe like numbers or like to gamble, or we like the thrill of the markets, or we like to manage money, or we like the feeling that we're growing capital. Maybe we're contrarians, right? Or maybe we're just sick of the system. A lot of reasons exist as to why people come to trading. But that's the problem, right? It's the emotion, right, that we bring into the game. That's the issue. There's a lot riding on it for a lot of people, because you can only imagine, you know, doing this for a living, like you do a bad trade and all of a sudden you might feel like you need to explain yourself to someone. I mean, I'm lucky enough that's not the case, but there's a ton of people who have to explain themselves to someone as to why they did that stupid thing called trading, right? And now they're out of pocket. It's just a drawdown, you know. If you kept trading, you're probably going to make it back, but it's just the emotional frustration of it. Or maybe as a child, people have always told you you're perfect. I know the good-looking ones among us, right? Like myself, not ashamed to say. It might be that thing where your mum always told you, oh my God, you're so handsome. Elevate your trading potential with E8, the best prop firm you've never heard of, where innovation meets opportunity. Access a wide range of markets from Forex to futures and more, all through their comprehensive evaluation programs. Tailor your trading journey with their customizable evaluation programs designed to align with your unique strategies and trading goals. Demonstrate your skills and swiftly transition to managing a funded account, earning up to 100% of the profits. Trade with confidence on their state-of-the-art platforms like CTrader, equipped with advanced tools and real-time data to improve your trading experience. Enjoy fast and reliable payouts with the ability to request your first payout in just 8 days. Join a thriving community of traders worldwide with 24 hours a day, 5 days a week support and valuable resources, all at your fingertips. I am super critical of prop firms, but E8 is definitely the best and has stood the test of time. So sign up now using the link in the description below to get 5% off your first evaluation. Do it now. Right, so you got used to that idea that you're perfect. You know, everything you touch turns to gold. Maybe you're an academic, maybe, you know, you've got some other kind of white collar job. It's very possible that you're gonna feel like you can do this because, you know what, I just solved the equation for Constance's Planck or something, right? Look, there's a lot of reasons why people feel that this business is supposed to be easy because of who they are, and there are a lot of reasons why it's going to be hard because you bring that to trading. You won't make it. When you step into the ring, you've got to be able to strip all of that away. You've got to be able to think of it like this is a new beginning. Like I was born again. That's where you are. You're born again. You're born into a world that doesn't care what you did, who you are. It doesn't care what country you come from, what's your race, what's your gender, you know, whether you like, I don't know, rainbow colors or you like black and gray, right? No, market doesn't care, right? It has no interest in that. So it's a new beginning, right? Other traders tend to respect other traders. Makes sense because you appreciate why people are doing it. It's partly why I sit here and talk to you guys, is because I really value you, and you know, I really appreciate you sitting here and listening to me having this conversation. I totally appreciate you. And don't forget to hit the subscribe button. I've got to say it. Don't forget to hit the like button, because that way YouTube knows I'm trying to do something good. I'm probably going to struggle against, you know, the talking heads out there who are pretty much overloading you with a load of bullshit that we already know is a load of bullshit. But, you know, it's what you see on your feed. If I popped up, maybe you skipped me. If you're listening to me, you didn't skip me. But the bottom line is that I can't compete with those guys. Not yet anyway. The whole point of this movement of you liking and subscribing is to help me compete with them. So when I start to put out what is inevitably the good stuff that's going to help you, more people are going to see it. So hit the subscribe button. It's the best I can say. Outside of that, it's in the hands of the YouTube algorithm. Anyway, bottom line, right, back to what I was saying. You can't come into trading with a lot of emotion. This just can't happen. It's just what it is. So you got to leave all that stuff at the door. You got to reinvent yourself, and then you are a trader. Well, you know, you're a trader. Whether you lose money, you make money, you're still a trader. That's what you're signing up for. So that's why it's hard, is people can't leave the baggage at the door. And it's easy because you have to follow a few core steps and principles. All right, what are you looking at? Let's put some flesh on the bones. I sell put premium. Almost every video I've got to say it, because some people are looking at my screen and thinking, what the hell is this? What is going on here? I sell put premium, right? So what you're looking at, right? So start again from scratch. Right, so what you're looking at is essentially an option chain, right? That's it, all it is, it's an option chain. I got to decide every week how much premium I want to collect on what asset, and All I do is sit back and let the probability work in my favor that all options expire worthless. Most of the out of the money options that I like to sell are going to expire worthless. And the people holding long those options are not going to make any money or very little. And even if they do make money for a time, they're probably going to end up losing most of it anyway. That's the basic premise of what happens here with an option chain. Obviously, I work with a lot of people. I mentor people through this journey. So if you want to really, really understand what's going on here at a much deeper level, then you can always reach out to me. My door's always open. I like to think my time is valuable, but I will always talk to you, no matter the issue. You can join the Discord server. Best way to DM me directly, of course, or effectively you can keep watching the YouTube channel. I've got a ton of videos on there on different aspects of trading that I cover. I'm totally an open book. I'm not in this to go on about, if you watch my last video, you get the premise of that. Well, I'm watching a trader right now on social media melt down to about 400k in 1 week. Right, he's out for 400k. The version of FinTwit that I'm involved in, I get to see a lot of people melt down, and these are your guys, right? Your 8-figure, 9-figure traders, right? Just melting down online, just like that, exploding. It's the kind of game they play, right? That's the point. That is the point. So for me, I'm not about that. I like to make trading real. The idea is that most people I come across, are trying to make a living out of this so they can change their lives, they can change their families' lives in some cases, and they can get a deeper understanding of the marketplace that governs the entire economy, the world they live in. And of course, there are those that live at home who just have a gambling addiction, and that's perfectly fine, and they want to use the markets as a way to assuage that. These lot are not worried about they're going to be homeless, or wife's going to ask where did all the college kids' money go, or any of that kind of stuff. They're just not of that. They're probably at home in their parents' basement. If you live in the US, if you're in the UK, then you're probably in the attic room, right? So it's just what it is, right? Everyone is what they are. Everyone's got their own stage of life, and I talk to the people a lot who I feel at that responsible stage of life, and they want to do something with this, because that's the only way. You're not going to be that guy who's going to be like, oh, show me the good stuff, show me the good stuff, show me the good stuff so I can go make money tomorrow. Hate to break it to you, there's going to be a lot of people who are going to stretch their hand and they take your money. Not a problem. Like, these are the guys I'm talking about. Right? If you haven't watched that video, you should watch it. Right? They will stretch their hands and take your money, and you make them rich, right? Because you want the secret sauce, apparently, to making millions. Right? It's life, but that's not what it's about. If you want to succeed at trading, you need to have your head right, but you need a good mentor. Right? You need someone who's going to understand this journey, what you're about to go through, and has experienced a lot of pain and making it work. Now they're surviving. Right? And one day surviving, you might just thrive. That's the point, but you've got to survive first, I'm afraid. So it's building in those good practices that make you survive, as opposed to make you a millionaire tomorrow, right? Where you're going to be betting the farm. But you don't have to listen to me. I mean, the next video down is one of those guys. The next video up is one of those guys. And, YouTube does a great job for them, because there's some people who are still deluded about what trading can deliver and what it can't. So who am I to question that, right? So I just talk to that small corner of the internet who want to do something different. End of story. What I've got, back to the point, right? So I've got a bull put spread, right? So I'm collecting premium around a bull put spread. It's called a bull put spread because I'm buying the wings, right? So I'm paying a very cheap premium, right? In this case, approximately $2 per contract. Right, but I'm selling the option contract to someone for approximately about $1.90. Build your trading career with The Fivers, where opportunity meets quality prop trading. The Fivers is one of the oldest prop firms in the business, with over 9 years of experience funding traders. Join a select group of top traders and access funding up to $4 million, empowering you to trade with confidence and scale your trading business. Experience exceptional trading conditions with low commissions, tight spreads, and the freedom to hold positions overnight or over weekends. Accelerate your trading journey with their hyper-growth program, doubling your account size at every milestone, propelling you towards your financial goals. Join a vibrant community of successful traders. More traders have succeeded in keeping their Fivers funded account than any other prop firm. Benefit from their reliable payout policy, receiving profits with a click of a button, ensuring you reap the rewards of your trading prowess. Unlock trading capital with sensible rules by joining the Fivers. Sign up using the link in the description below. This supports the channel and our sponsors. Do it now. Obviously, the difference between the two is what is the spread, and that's what my position is right here. So what do I want? I want all of this price print to get to here, 0 by Friday. I've got 3 days to expiry. Implied volatility is 56.9%. That's what I'm doing. It's pretty simple. Right? Why did I do that? I did a bull put spread as opposed to a naked put, and I did that because I wanted to get a buying power reduction. So typically that would look like this, right? If you're building a similar kind of spread, it would look like this, right? This is not an active one at the moment. It's just strategy builder. You can put in the different legs that you want. Doesn't really matter. You can delete legs out and so on, and then you can basically adjust it into the total amount of contracts you want built into that spread, and you're good to go. Pretty simple, pretty straightforward. So again, if I wanted to build it, in this case, that's the active spread. It's a 105 at the money. At the moment, it wasn't at the money when I got it, but you know, it's what it is. And I'm looking, and I've legged that with the 85s, right? So it's the exact same thing, right? And then obviously put the amount of contracts you want. You can do any amount of contracts that your capital can handle. And then you get a buying power reduction. That's it, right? Because I've added something to the wings. It's called a bull put spread. Right, and then you've got a bear call spread for guys who sell call options. I sell put options primarily. That's my game. And I do all these little smart things to maximize and, you know, get the most out of it. So that's what I'm saying, right? I've got a method behind all of this. I've got a method behind the madness, but I know this works. So that's what I do. I don't waste time with too much else, right? So that's my primary source of income. And then I've got futures. I manage assets. I've got other things I do, right? So I trade cable, from a futures perspective. I can trade it spot as well at times. Just depends, right? It's all access in the market. I do everything, right? Anywhere I see an opportunity, I can do a corn trade, I can do a live cattle trade, I can do a lean hogs trade, I can do a soybean trade. I'll trade anything, right? Because the point is, you're trying to stay on top of your game so you can go where the flow is going. That's what I like to do. Right, so that's one of the things I do. But I'm disciplined about it. I've got to do it every week. Right? I've got to have something on every week because that allows me to build an idea. Right, and this is not the only one I've got going. Right, so I've got obviously PayPal, which is on a 52-day calendar. So I'm on the April. Let's just bounce over to that. Right, so you can see I've got contracts on 70 puts. These are naked puts, right? The idea is that probably looking to cover them about 50 cents, depending, it's 51 days, so I might look to cover them at 80 cents, right? I got these ones about $1.50, and then I added to that position by getting some at 67.50, just on the board at expected move. It's about 20 deltas, right? So what does that look like? Right, so you can see that obviously this one's doing a lot better because I got a better price on it. So in the end, what am I looking to cover these? About 54 cents, right? I'll put a limit order in at a later stage. So I'm loaded up, right? And A bit of movement here and there on the deltas, I'm going to have a nice collect by the end of the week. Plus, obviously, I've got those short-term calendars, 3DTs, right? So that's a game I'm playing. I'm playing a different game, right? So this is more my somewhat guaranteed income. Weeks go here and there, you know, where you think you're in for a good collect and you don't collect a lot at all or nothing. But I can be consistent with it. That's the point. Right? And of course, there are other aspects that I can play with. Right? So I trade cable, right? And again, I have a method. I'm all about order flow, volume. I want to be able to see where the money is, where everything's churning around. That's my primary method. Give you an example. This was the London Open, big move on cable. I know where the traders are, right? If this is the London Open, the market's closing up here, then it means that, obviously, judging from the volume at the London Open, the biggest buyers have to be standing here. So I might as well make a note of it. That's easy. The hard thing is having the confidence to execute when the price comes back to that level, which it did, right? It traded back down on Wednesday the 19th of Feb. That was a great long position. Where am I looking to take it to? Of course, I know we've got some order flow up here, but really, I just want to get it to the liquidity highs, right? On a major session. And that happened about Chicago, right? And then we broke upwards, right? Bit of volume there, I don't want to stick around. I'll probably cover the trade. Obviously, we go a little bit higher in reverse, but again, what do I want to do up here? I want to sell. But it's taken me ages to build this map of cable, just cable, not no other asset. And as you can see historically, I've been mapping this for a long time. Now, of course, not every trade was going to work out, right? Some of them were just a factor stop, right? We ride into a level, market doesn't act right, it doesn't sell off correctly, we break above. But as soon as those things happen, I've got an early warning system to get out of that trade because I don't know where it's going to go next. And then I'm looking for the next big move, which obviously came here, probably some announcement, New York Open, you know, NASDAQ stepped up, nothing major, that tells me we're going to go long. Right? And the thing is, I've got videos where I explain all of this in great detail. But the point is that without someone mentoring you and taking you through these steps and making sure you follow these different steps, you're like, no matter how much I sit here and teach you any of this, you're likely not going to follow through. I could go through a whole, you're just not going to have the discipline to follow through because it's not your system, it's not your idea. For all you know, it's all bullshit. That's the problem. That's what makes it hard. It can't be this easy. Of course it's this easy, but it can't be this easy. It is not this easy. It's hard because you got to do it. I've had years to build up the discipline, and I've got years to collect the data on what I'm doing. I've got years to see that it's worked consistently over time. Right? I've had drawdown periods, but now I manage my positions in such a way that it's not a big deal. And as you can see, I've got a pretty decent source of income coming from premium sales. So I can balance it alongside. Some of my portfolios are long term. I've got long equity portfolio. So you can maneuver, and you don't need a massive amount of capital to do any of this. You just need to be particular about where you put your capital and around what you want to trade it. That's it. It could be you make £1,000 a month from CFDs, and it could mean you make £5,000 a month from selling option premium, or it could be you make another £300 a month from having a small long equity portfolio. It could mean you do a trade once a month that's a specific setup that you always try and take advantage of, and maybe that brings you an extra $100. It all adds up. That's the point I'm trying to make, is that when you've got allocations in these diversified ways, it all starts to add up. It's funny, people who, if you're in the property business, right, you own a couple of properties, it goes without saying, everyone's like getting these little fractional gains from their little monthly rents, and they're just coupling it up, and you got like 10, 20 properties all bringing in a couple £100 here, and it adds up, right? Property people seem to understand it, but traders sometimes it just goes whoosh over their head. Like, no, I got to be making 30,000 months and 50,000 months from one trade. I mean, you're nuts. And you got, I don't know, got a 5k account. Come on, be realistic. It's not going to happen that way. So you got to diversify properly around the things that are moving. That's the point I'm trying to make. Right, so having this kind of mental map on trades, you don't need to bet the farm on it. Right, market drops in here, you think it's a good trade. Well, guess what? Do a one lot on it. See what that turns out to be. Do a one lot. You don't have to go crazy. Just do a one lot. And I'll tell you what a one lot is if I can find the bloody tool that I can use to check that. Oh, there it is. Lot tool. Right, so let's say you saw this dip into this high volume node, as I like to call it. We pop back up and we're holding. Right, 5 in the evening, you think, right, I'm taking this trade, it's an overnight hold. Right, I'm going to stick my wrist somewhere under the lows, really and truly we shouldn't drop back down here. Right, I'm going to go in one lot on this trade. What's the risk on it? It's 26 ticks, come on. Like, 26 pips. $10 a tick, $265, that's it. Right, and I'm going to run it and see what happens into the next day. It's an overnight hold. I'll see how the position winds up the next day. I'll aim for the high. That's a 2.5. Right, the bold ones among you might even go for the next offer stack, right, or the next volume node. That's a 3.4. You know, if you can pull that off, great. Right, for some of you, won't look like this because risk is dynamic. Right, some of you might think, oh, you know what, I can't lose this. I'm going to set my risk under here. Right, I'm going under the Fed level. They can't get me there. What's that? That's 98 ticks. Right, so you're going 98 for 91. Right, you might have been able to eke it. If you're stubborn, right, and got 105, but that's it. Right, so risk reward is a sort of dynamic number. It's just down to where you put your stop loss and all that. So it's not a big deal. Right, but I'm making the assumption that you're confident in your position. You want to minimize that risk. You're going to sit somewhere between 25 ticks and 30 ticks, for argument's sake, and you're going to be looking for max the offer stack or the high. Right, it will determine what your risk reward will be. That's it. You know you want to get out a major session. Everything's going to happen in a major session, whether that's Chicago, that's London, that's New York. That's it. It's really simple. It's that easy. But I know it's not that easy because most of you are not going to be able to do it, given a chance, right? It's an example. So I've mapped out that node, and I can see that in Chicago, we opened up, boom, we hit the level, high volume node again, we're closing above the highs, and we're holding. The next move should have been a sell-off, but instead, what do? We put in a new high after Chicago. Well, then that's it. We're going higher. You don't even want to, why do you need to second guess it? We've got a high price print, a lot of volume, no sell-off. We're doing new highs. So we've got what we call a poor high in the business. So there's a poor high. But it's a poor high, it's going to get taken. So I step away. The next good place to trade will be back in a high volume node. So I might put on a short as we get in here, but what am I looking to get out? Back into the volume node down here. I can't risk having to trade more than that. That's why I keep saying it's dynamic. Everyone keeps thinking this risk reward thing is just, it's dynamic. You're in this stack, you're holding, you're thinking, well, there's no volume, but I'm in a volume node. So I'm going to go overnight. I'm going to sit my risk above the high volume node, and I had to bring it down here to cash in on the, this is just a little over 1-to-1. What are you going to do? That's it. That's all you have on the trade. We're facing an exact same scenario now. We've got a poor high, right? Because we pushed in Chicago. We're selling off, so we're likely to go down. But again, if you wanted to take a trade like this, it's a good trading opportunity, right? You would have gone short on the pullback into the node, stayed above here. What are you looking for? Well, we've tested this level twice, right? But this is the max that you want to hope for. That's where the high volume node is. Truth be told, if we start to sell off, it's a high likelihood we could sell off back down to retest this level. Right? It's a much bigger run. You can manage that, right? You can get down here, take half the position off, break even the rest, and say, well, look, we get down here, Bob's your uncle. I don't make as much money, but I needed to manage the trade back down, right? But that would be a good short side. I know it's a poor high, so it could get taken, but if it gets taken, guess what? What, you think if it gets taken in the major session, I won't get out? Of course I would. I'd be like, okay, well, we're taking the highs, we're going up. I know how far it's going to go. And minimize my risk. I'll take the trade-off. It's 16 tick loss. Done. I'll watch it. I get to Chicago, we put in some more volume up here inside the node, I'll short it again. No harm in doing that. I lost 16 ticks. If this thing drops for about 40 or 50, what's my net position? But you've got to be consistent with the idea. Easy for me, because I've been doing this for a long time. Exactly as I'm explaining it to you, that's how I've been doing it. Not difficult. You're probably going to get a good month where it's trade after trade after trade, and then you're going to enter a drawdown phase. That's where it gets hard again. That's why it's hard. It can't be this easy. Of course not. It can't be this. Of course not. It's not easy. It's also easy if you just be disciplined and just keep doing it. But it's hard because you stop and you panic or some other nonsense. Right? But there are going to be times when it doesn't work. There's a lot of nodes where we blow through them. For example, the node that was sitting here, I like to call these pay-ups. Traders are paying up because they think the market's going to go even higher over subsequent days, so they're happy to take higher prices. But these are vulnerable to shakeouts because they're too high. Market makers know that, so they just push it down and keep treading under these high volume nodes just to make sure they whip out a lot of weak hands. Right? So, okay, use this one, you missed it. You might have gone long here. What you should have been doing is saying, you know what, I'm going to average in on this one. I want to do a one lot, but it's too high, I'm not sure. So I'll do half a lot. I'll sit at the bottom. And then I'll do another half a lot at this node. Now I've got one lot and I'll sit at the bottom. Right? So I'm not overextending my stop. It's all baked into one trade. You see, people who've got, and I'm talking to you MT5 and MT4 users. If you've got an MT4 and MT5, right, some brokers will offer you what's called netting accounts, which essentially means you can't go long and short at the same time, but any trade you take, it'll be netted out. So if you did one lot and then later you did two lots, it will be netted out as a 3-lot position, but your average price will be adjusted. So you won't show your entry anymore, it will show you what your average price is between those two positions if they're executed at two different prices. Pretty easy to understand, right? So I have an average position here, which is going to be the difference between, or the average between my first entry and my second entry. My stop position is the same for all. And that's what I'm trying to say to you. So if you had a netting account, your stop position wouldn't change. What would change is your average price, or your average price between those two trades, right? That's what a hedging account doesn't do, and that's why a lot of traders don't understand this concept. So now I've got my full lot position on, and I'm looking to ride these to the high. Right? That's what both look like together. So if you notice, one of these positions offering me a 49 risk reward. Well, yeah, but it's averaged out now. The other one's offering me a 1.7. So you can see the dynamic nature of risk, especially when we start to apply it. But the thing you're going to know is that you've got a better price. That's all it is. You've got two different prices averaged out, so technically you've got a better overall price position, which means that your risk reward is also improved. It's not apparent to you yet, but it will be. If this trade turns out profitable, you'll see how much money you make. It will start to look different from what you're used to doing. Anyway, this is what I talk about. I will give you value every time you turn up, and I'll take these brief moments to just give you value. Now I understand this because I trade equities as well. Right? I see this play out in equities, so it's going to play out in currencies as well. So I just look at the market, they're all doing the same thing, same algorithms. Right? So that's how you would manage that, rather than end up like having to stop yourself out just below the level because someone says to you, you've got to stop out below that level. Well, it's not like that. So you can see we took this one out and then we went up. So you can see that it doesn't always work out. And I make a mental note of what doesn't work out. What are we talking about? All right, so we take this high, what do? We get out. That's exactly what we're just talking about. If it was a good position for a short for here and we're still offering up, then I did say we got a poor high. Right, so more than likely we're going to take the level. But I don't know where it's going to go. As soon as we take the level, I get out. And if we don't take the level and we struggle here and we still back out, then bumps your uncle. But it will be a minimal loss to take, because as soon as we put in a new high, you know the market's going higher. Look, and there are tools to quantify this. This is our MT4. Yeah. This is our market profile, on MT4. There's a fair price here. This is the week. It's a Tuesday. Typically, we're going to get an average range that could extend to here. That's a fair price. It's a naked fair price. So 127.50 is definitely on the cards. But from here now, you're going to start to see a reaction. This is a weekly profile, right? And that sets us up more than likely for a price pivot down to the lows, right? And there's a gap fill coming. I keep saying it. Sooner or later, this gap's going to fill. But it can take a couple of weeks for that to happen. But as soon as it happens, it's going to be faster. It's going to be hard. Right? These gaps never stay unfilled. Right? That's the beauty of having a market profile. So I can see all of that. So how does that help me understand how am I going to position for risk? It means that when I take a look at a position like this, I can immediately see from the profile what's likely to happen because I can see it on intraday. So now I'm preparing myself that, okay, we've got a strong volume node coming out of Chicago. It's about to get taken. What do you think happens if this level gets taken? Look how many people are trading in here. Whole thing's going to explode. It's just going to go boom, rocket to the top, and then eventually sell off. Right? We're sitting on the node, right? And I'm expecting this node is supposed to, but we're taking a node that's going all the way back to the 18th December Fed, and that's what we're challenging now. So it should hold up, but if it doesn't, we'll be prepared, because what we're going to get a breakaway, right? It's probably going to go much higher. We already said 27.50 at a bare minimum, right? Because we can see that on the profile. The Fed volume has been the highest volume so far. Point in case. So it's easy. When we go through these simple steps, it's easy, guys. It's not that hard. But can I convince you that it's easy? That's not what I'm trying to do. Because it's going to be hard for you. Look at my premium sell. It's already down, right? If people getting out of this trade, it'll be about 93 cents, for example, on a bid, right? Splitting the spread, right? It's 93 cents, give or take. 94 cents, you could get out, possibly 95. Right? Last trade was 106. Someone's going to trade down here pretty soon, right? I had these premiums being sold at $1.20. So how fast the value of these are wiping, because these were a little bit further out of money. So they're going to get crushed really quickly. Over the next couple of days, we're going to enter the tough part of the decay curve, 45 days and under. Things are going to start to bleed value. Guys, that's what I'm saying. It's just having an open mind. Well, thanks again, guys. Appreciate it. Adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket. But if you can make your client's money at the same time it's advantageous to everyone, correct? No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?